Hi guys, and welcome back to Kiwi Investments. Today's video will look at where to put your money and also have a broad look at the New Zealand economy. The reason we are going to look at the New Zealand economy is because last week I put out a video showing where the big profits in America is with up to 200% return on your investments. Now that video only got 68 views. On the same weekend I put out a separate video showing where the biggest profits in the New Zealand stock market is, and that video got 271 views. Now 271 is still a low number compared to other YouTube channels, and that's one of the reasons why I'm considering stopping my YouTube channel. But 61 is relatively much smaller than 271. So that got me thinking, are Kiwis afraid or experience anxiety investing in overseas markets? So that's what I want to go through in this video. We're going to talk about the New Zealand market and the New Zealand economy versus overseas American market and economy, and hopefully encourage you to expand your investments to overseas markets. This will not only give you more diversity for your investments, but it could potentially give you a better return as well, because the American stock market is much more volatile, meaning the price changes are much bigger than New Zealand. And at the end of the video, I will show you how you can invest in the American stock market while living in New Zealand. So let's have a quick look at the current New Zealand and US market. So in this table, I have 500 US companies, and in another spreadsheet, I have over 50 New Zealand companies. And if I were to change this from highest to lowest, ignore this error. And the biggest improvement this week was 73%. And then you have 22, 13, and 11. And all the other companies are less than 10%. If I go to the US market and do the same thing, if I were to change this from biggest to lowest, you see that there's a lot of companies that are well over 10%. So there's a lot more companies you can get a much bigger profit than the New Zealand market. And in the column next to it, I have the price change since the 20th of Feb. I picked 20th because that's the day before everything went downhill. So if I change that from biggest to lowest, and if I come back to the New Zealand spreadsheet and change that to biggest to lowest, you have 9 companies that not only have recovered but have gone over 10% of the share price recorded at 20th of Feb. If I come back to my US stock market spreadsheet, again you have way more. You don't need to count it, you can obviously see that there's way more companies. The green column, I have the price change since the lowest point from 20th of February to today. And if I change that from biggest to lowest and come back to the New Zealand one and change that to the biggest and lowest, you hardly get companies that are in the 200%. Whereas in the US companies, there are 3 companies that have increased 200%, another 3 companies close to 200, and then some more that are above 150%. Look at the New Zealand stock market. So if you call the bottom perfectly, there isn't that much return that you can get. It's still a lot, don't get me wrong, but I'm trying to show you that the US stock market is much more volatile. The price changes are much bigger, so you could potentially get more from your investment. We'll come back to this spreadsheet. But first, I want to talk about how fragile the New Zealand economy is. And I want to talk about the dairy industry. So farming is in a whole lot of trouble right now, and people are just ignoring it. And by right now, I don't mean the pandemic. I mean the situation that we are in. Farming is very outdated, guys. The population keeps rising, and having to farm animals to feed that population is just not making sense. So they have successfully made meat in a test tube that is much cheaper, much faster, and cleaner for the environment. It's much cheaper because you don't have to pay for the land and animal care to produce the meat. It's faster because the meat takes about 3 to 4 weeks to be developed, whereas from a cow, it takes about 2 years before the animal is killed. It's cleaner for the environment because there's no methane or carbon monoxide put out into the environment. The only reason why this hasn't hit the farming industry yet is because they haven't figured out how to produce this meat in mass quantities. They already know they can do it because they have successfully done it. They just need the investment and technology, logistics to turn what they have done into a mass production company. Once this is sorted out, it's going to hurt New Zealand a lot, because dairy export is still one of New Zealand's biggest income. Farmers are saying that they are not worried because they are assuming people would always want meat that comes from a real cow. And I can't believe that this is happening again, because this has happened in the past and New Zealand took a big hit, which we still haven't fully recovered from. I'm talking about wool. And if I come to the New Zealand stats page and look up wool, you can see that wool was New Zealand's main export earner from 1850 until the 20th century. In 1920, will contributed to 26% of the total value of export, and then by 2011 fell to 1.6%. They saw this coming, but they did nothing. The reason why it fell is because they invented synthetic fiber. So instead of real wool that comes from sheep, they introduced synthetic fiber, which is much cheaper to produce at mass quantities. Back then, people were saying the same thing they're saying now about the farming industry, that people would always want the real deal. And if you look at the graph here, you can see that wool export volume has gone down more than 50%. People are saying that they would always want the real meat that comes from a real cow. Well, I don't think so. If we had the option of 2 burgers, one with meat that comes from a cow and cost about $10 for a burger, and on the same menu you have another option with meat that comes from a test tube but has the same nutritional value and cost about $2, which one would you pick? The one with the laboratory meat has the same nutritional value, it's better for the environment, and it's cheaper. And also don't ignore the trends in the new generation. The new generation don't care about farming, they care about the environment. So they don't like seeing animals getting killed for meat. So my point that I'm trying to make here is that New Zealand's export dairy industry is in a lot of trouble and people are just ignoring it. In my opinion, my unprofessional opinion, farmers are fighting a losing battle. Now let's talk about another main income for New Zealand, and that is tourism. With the New Zealand borders being shut and people being too scared to travel, but mainly because the borders being shut, New Zealand will take a big hit. There is a reason why our present and past prime ministers have all gone on international television to promote New Zealand. It's because we need their money.
Here to present tonight's top 10 list, please welcome New Zealand Prime Minister John Key. Why is he out here, Paul? For the last 6 years, New Zealand has been ranked as one of the 5 best destinations in the world.
Visit in the next 30 days? I'll pick you up at the airport.
Wow, that's darn nice. That's darn nice.
Prime Minister Ardern, I'm happy to say, she's come on the show a couple of times already now, and she invited me to visit New Zealand both times. And the second time she said she'd pick me up at the airport. So recently, I got on a plane to see if she meant it.
You came to pick me up. Thank you so much.
Well, no, I mean, that's not particularly extraordinary at all. I still do the odd airport run.
All I could think of the entire time I was down there, I wish everybody could come with us. And so we decided to film it. New Zealand is one of the greatest places on earth. The people are incredible. The landscapes are absolutely breathtaking.
So you get the idea. The reason why our prime ministers, past and present, have been promoting New Zealand is because we need that tourism money to come in. Without it, we are in serious trouble. And as I explained before, with the advancement of technology, dairy farming is in serious trouble. So the New Zealand economy is in serious trouble. Whereas compared to the US economy, even though crazy things are happening over there right now with their leadership, the economy is still going to be strong. There's a lot of money there, a lot of investors, a lot of customers, a lot of people with really smart businesses that will keep the economy going. You're watching this video on a platform owned by Google. You're probably using a device such as an Android or an Apple to get onto the platform. You're probably talking to your friends using an American platform such as WhatsApp and Facebook. Do you see what I'm trying to get at? The American companies are just too big to go under. The US economy is strong and sturdy compared to New Zealand, which I have to say is a bit fragile. More fragile than people like to admit it. Now, yes, I only talked about the dairy and the tourism industry. There is more to it than that. And you're probably thinking, why would that affect other companies? Well, if the economy isn't doing well, people are going to lose their jobs. People won't have that much money. There won't be much investors. There won't be much customers. And guess what's going to happen to your favorite company? It's going to suffer as well. We'd be better off if we get all the farmland and turn it into data centers. The reason why I'm comparing the two economies is again because I think Kiwis are a bit afraid to invest overseas. But I'm trying to encourage you to start thinking about investing overseas. But just remember the rules. Invest in strong companies, invest what you're comfortable with losing, and invest for a long term. And another reason why you should invest in the American stock market is dividends. Everybody loves dividends. Companies in New Zealand usually pay dividends twice a year, whereas in the US, companies usually pay dividends 4 times a year, as you can see here. And not only that, you won't get a company in New Zealand that pays pays you dividends every month. Compared to America, I will put a list of companies on your screen right now that pays you dividends every single month for being an investor. So if you love dividends, then you should definitely look into American companies. Now, how do you invest in American companies if you're living in New Zealand? Well, there's two dedicated platforms for that. There is Stake and then there is Hedge. I have done a video in the past that compared both these platforms. So if you're interested in that video will pop up at the end of this video. I use Stake almost every single day because there's no commission fee. So there's no charge for you to buy and sell. So you can get in and out of trades without having to worry about transaction fees. I recommend Stake for anyone looking to invest small amounts or dollar cost average or day trade or swing trade. And if you use my sign up bonus link in the description, you will get a free stock when you fund your account. So there's another bonus. Another potential platform you could use is Sharesies. They announced that they're going to add the ability to invest in US companies soon. We'll have a look at that once it becomes available, but I'm not going to wait around for that. I probably won't use them anyways because they're very slow when it comes to executing your transactions. I'd rather use a platform that is dedicated to the US stock market. But if you do want to use Sharesies, then use the second link in the description to sign up. If you use that link, you will get free $5. I have done tutorials on Sharesies as well, which will pop up on your screen at the end of this video. This video is getting a bit longer than I expected, so I'm going to end it here. If you have any questions, ask them down in the comment section and I'll get back to them as soon as I can. Thanks for watching and happy investing.